Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka, Thursday morning. Lots of cues, of course, just about a day after the Operation Synindhur, border tensions continue to simmer between India and Pakistan. We'll get you the latest developments on the show later on. But, we have the top story this morning. Fed, of course, has held on to interest rates for the fourth straight time. That was widely expected. In fact, expectations of a rate cut in June have also been dialed down now. In the press conference, Chairperson Jerome Powell had indicated that Fed decisions are free from any political pressure. This comes in the wake of increasing pressure from Donald Trump to reduce rates. But, it was a fairly, blunt Jerome Powell who said that, we are not going to respond to any kind of political pressure. And, of course, taking into consideration economic situation, we will go ahead with interest rate trajectory. They've also mentioned, in fact, the Fed chairperson has also mentioned that tariff headwinds pose a significant risk to economic outlook going forward. And he's also, said in as many words that we are where we are in terms of interest rate trajectory due to, the tariff policy. To put that into perspective, I have a live guest with me joining in live from San Francisco this morning, Seth Freeman, Senior Managing Director at GlassRatner-B Riley. Seth, lovely to have you on the show. Thanks a lot for taking out time and joining in. My first question, with the Fed holding steady despite external pressures, do you think this current policy stance is sufficient to absorb future shocks, especially if trade tensions escalate again?
Well, I don't know what it's sufficient or could be at this time, but I think the Fed chair was very clear that the Fed's positions are going to be based on what the president does in the near future, and is clearly not responding to any political pressure. And I think that was also an important part of today's message.
Powell directly linked sustained tariffs to potential inflation and unemployment spikes. From a US market perspective, is this prolonged uncertainty yet to be priced in? Because US markets have recouped post-tariff announcement losses.
Yeah, it's amazing how much the indices have recovered from the plunge. But no, I don't think it's priced in. I think it's going to just be a period of some volatility because the announcements are not, unidirectional. For example, we had a teasing, so to speak, that the president is on the verge of some kind of arrangement with the UK. And at the same time, he's announced that he's not lowering this 145% with China. So it makes it very hard to decipher what the plan is.
You alluded to how President Trump is not willing to go back on the 145% tariff on China. But later this week, we have official trade talks with China set to kick off in Switzerland. Treasury Secretary Bessent is expected to meet his Chinese counterpart. What are the probabilities of a breakthrough? And if at all there's some kind of an agreement reached, could that significantly ease worries of a recession when it comes to the US economy?
I'm really not in a position to predict if a decision will be reached, but I find it highly unlikely. And the way things are looking in terms of the command and control here in the U.S., that Secretary Bessent probably will not have sufficient authority to make a deal.
Okay, I also want to talk about the messaging coming in from the Fed chairperson. You mentioned he was a bit queer, so to say, but he's not minced words when it comes to how the tariff policy might, weigh in on economic outlook going forward. As I mentioned at the start, June rate cut bets have been dialed down. Would you believe that there is a case for a July rate cut, or do you think that depends on what kind of trade deals the US manages to, thrash out with other nations?
It's very hard to imagine today. And the reason is that we're just now beginning to feel the impacts of the tariffs and the uncertainty caused by the tariffs. There are companies announcing layoffs. It's very difficult to attract and arrange private equity investments at this time. Uh, Venture capital is less aggressive. Uh, there's so much wait and see. And at the same time, U.S. consumers are really tapped out very heavily on consumer credit. And the confluence of events here is just negative. Now, on the other hand, this whole thing could be a self-fulfilling prophecy in terms of achieving a higher level of unemployment that the Fed might be looking at as part of its target. And there's going to be a lot of companies filing for bankruptcy. Toy companies, for example, where a majority of those products are imported from China, they cannot afford to pass on 145% tariffs. And we're just reading today about Apple willing to absorb an amazing $900 million worth of tariff impact, but it's not sustainable. Now, on the plus side, that's all very positive for India.
That's true. Of course, because Apple is also looking to move its production from China to India. So India, of course, stands to benefit there. But let's talk about the dollar as well. We've seen a stunning fall in the dollar, especially with regards to Taiwanese dollar. Going forward, of course, from 110, we've seen the dollar come to sub $100. 100 level, sorry. Would you expect this weakness to persist, and what does it really mean for emerging market flows? And since you're talking about emerging markets, in the wake of the geopolitical tension between India and Pakistan, border tensions escalating, foreign investors have still kept their faith, in the Indian market. If you see the last 15, 16 days, FIIs have pumped in over $5 billion just in a matter of a fortnight. Do you expect the flows to continue? And foreign investors to look past the short-term volatility as a result of this geopolitical tension?
I think foreign investors are now waking up to the fact that India is going to become a stronger alternative to China. But I don't think that many but a lot of this is not necessarily driven by specific funds. A lot of this is indexes, emerging markets indexes that have to invest more in India, and some ETFs. I believe that the situation between India and Pakistan is the adverse situation is underestimated by foreign investors. It may be viewed as, from here, a little more of a skirmish, without understanding completely that we're dealing with two nuclear powers and a situation that's been festering for years and years. Now we're being told that the responses by both countries are relatively muted, but I'm sure people in India and in Pakistan don't feel that way.
Okay, that's the view then. Foreign investors perhaps underestimating the situation, according to Seth. With that, Seth, I would like to leave it there. We are running short of time. Would love to have a longer conversation with you. Thank you for taking our time and joining in this morning.
Thank you for having me.
Thank you. And on that note, we are just looking at 15 seconds to go for the markets to open. Yesterday, we had a fairly matured reaction from the market to Operation Synindhur. One would have thought that we would see a knee-jerk reaction. We did see one at the start of trade, but soon after we recouped all of those losses. In fact, managed to end the day higher by 30 points on the Nifty, and it managed to defend that 24,400 mark today. Building on that, of course, the GIFT Nifty was hinting at flattish cues at 9 a.m. But now we are seeing a relatively higher start. 24,431 on the index. Pull up the mid cap index, because mid caps were outperforming yesterday. I want to see if the outperformance is continuing today as well, because it was a 2% outperformance on the index. We saw a lot of stocks reacting to good earnings, so the moves are fairly earnings driven, and every dip so to say, is getting bought into. Yes, it is a good start for the mid-cap index. As we speak, it's up 0.5%. The Sensex up 140 points. Bank Nifty as well yesterday, it broke out of its consolidation mode that it has seen over the last few sessions. So today as well, it is building on the gains that it saw yesterday, 0.5% gain coming in on the mid-cap index as well. As of now, the advanced decline ratio is in favor of gainers. It's pretty strong, 3:1. That's the NSE advanced decline ratio. In terms of individual movers, what's taking the lead is Tata Motors, another 3% uptick yesterday. It was reacting to the FTA between India and UK, and this morning, of course, there are indications that Donald Trump, in fact, has indicated that there will be a press conference with a mega announcement in terms of a trade deal with the nation. And New York Times is reporting that there could be US could announce a trade deal with UK. So UK facing stocks in focus again today. Tata Motors, up another 2%. Coal India reacting to good numbers. Power Grid, Axis Bank, Kotak Mahindra Bank, IndusInd Bank, so all these three private sector names doing well. Adani Ports, Geo Financial, SBI as well among gainers today. Remember, PSU banks have been in a spot of bother, especially in the wake of weakish earnings. But SBI in the green today. Ultratech Cement, Bajaj Twins, L&T ahead of numbers is trading with good traction. What's not doing well? Pharma stocks once again on the back foot. Dr. Reddy's top Nifty loser. Aside of that, you had Eicher Motors among laggards. ITC, that was a laggard yesterday as well, extending losses. Eternal as well, extending losses. So FMCG names are under pressure again today. Nestle, that's another one. HUL as well. So all these a combination of FMCG and pharma names under pressure. But let me quickly bring on board our technical guest for today, who's been waiting by. Chandan Taparia of Motilal Oswal joining in. Chandan, thanks a lot for waiting by so patiently. We flattened out now. We were up somewhere around 30-40 points at the start. But looking at the reaction to Operation Sindoor, it has been fairly matured for the markets. And even in previous instances, we saw the market take all these surgical strikes in their stride. Every dip getting bought into, especially the triple-digit cut we saw yesterday. We staged a very smart comeback from there. Do you expect the market to be fairly range-bound now, wherein dips will be bought into, and at higher levels we'll see some bit of selling? Are we going to remain in that cycle right now?
Yeah, good morning. Thanks for having me. So we have seen a decline towards 24,200 zone, but that was being bought on the last trading session, and index managed to bounce towards 24,450 marks. Today's opening on flattish note and got stuck in a range. I believe 24,200 to 24,550 is going to be the probable trading range. We need to keep in mind that market has already seen a recovery of more than 2,500 points, and 24,550 is 61.8% retracement of the entire down leg from 26,277 to 21,743. So market requires some follow-up action beyond 25,550 to commence the next leg of rally. But as of now, it got stuck in the range from last 7-8 trading session, and until it holds 24,200, we can continue to be with buy on decline stance, even with the view that upside being kept. So play this range between 24,200 to 24,550 marks in the Nifty. Talking about Bank Nifty index, I believe it managed to hold 54,000. It has been moving in between 54,000 to 56,000 from last 13 days. So it has taken support at the lower band of the zone, and because of that, some recovery could be seen towards 55,000 to 55,250 marks.
What about PSU banking index? It saw a steep cut of 5% day before yesterday. Yesterday, it saw some bit of mild recovery, and today as well, it is trading in the green with SBI among the top Nifty gainers. Any thoughts after the recent correction? How are the charts of SBI, Bank of Baroda, and PNB also that reported numbers yesterday? How are these three poised on the charts?
So if I look at the State Bank of India, SBI, the stock has seen some corrective move from 835 to 765 marks. It witnessed some recovery from lower levels, now holding to its rising support trend line. Already seen a corrective move from high, so upside maybe there, or support based buying could emerge at lower level. So I believe 764 could act as a support for a recovery towards 800 in SBI. Looking at other PSU name, and if I just look at the PNB, it witnessed a corrective move, negated its higher top, higher bottom, has been making lower top, lower bottom until it remains below 97. It can go down to 90 marks. So I believe most of the private, most of the PSU banks could be under pressure, whether we talk about Union Bank or SBI or PNB. I believe upside is likely to be kept. However, selective private bank can see some recovery, but PSU will see the kept upside in the market as of now.
Okay, that's about PSU banks. FMCG names have once again come under pressure for the last 2-3 sessions. We've seen some bit of weakness. Dabur reported numbers post market hours yesterday. The stock, I think, is down 2.5%. It was a weak set of numbers, although expectations were also fairly subdued. Between Marico and Dabur, would you go with a Marico because numbers were good and the stock also has staged a good rally post that?
Yeah, so I'll be with Marico. Stock really rallied well on the last trading session, gave a consolidation breakout of 16-17 trading session, formed a strong bullish belt hold kind of pattern where open and low were same, and it witnessed the recent the new lifetime high. Even on the weekly, daily, monthly charts, at a price looks quite promising. However, today is down by around 1%, but again, buy on decline could continue. So wait for some more decline. Use the support of 707 for a rally to a 750, 760.
Okay, buy on decline strategy for Marico, and the charts of Marico are better poised compared to that of a Dabur. Let's talk about some of the companies that will be reporting numbers today, in particular L&T. The stock has seen good traction in the last 1 month, although recent times, 5-6 days, we've seen some bit of weakness creep in. Today it's among the gainers on the index. And earnings wise, profit and revenue are expected to see a good up move or bump up on the back of strong order inflows. At a 3,317 or so, what would you do with an L&T? Do you think there is a case to look at some of these manufacturing heavyweights now? The stock has seen a fair bit of correction. If you look at the YTD charts as well, it's down 10%. A good time to take positions here?
So L&T has been consolidating in a range. The good part is that it remained resilient, but the concern is momentum is also missing at current zone. So I believe it has been consolidating in a small range from last almost 7 days and not reacting even after the market volatility. The good part is the decent recovery was seen from 29.65 to 33.50, but now got stuck in a range. So buy on decline stance can be applied here with support of 3,200 for an upside move towards 3,400. So 3,200 to 3,400 is the range to play for L&T.
Okay, that's about L&T. What would you do with the Voltas? The stock has been stuck in a downtrend. Hasn't been able to stage any kind of recovery. Numbers came out. It was mostly below expectations, but it did, spring a positive surprise in one of its divisions, I think, which is why it is seeing a 2.5% uptick. Do you think most of the selling is out of the way on a Voltas, because the stock is down 30% on a year-to-date basis?
Yeah, so we have seen a corrective move in the counter from 1945 to 1135 in last 7-8 months. It formed the higher base at 1200 marks in last few days. Selling pressure which was seen in the counter is taking pause, or the pace of the selling is now getting absorbed. So because of that, some early sign of bottom is clearly visible. Major support is at 1200. Immediate support goes at 1240. And with this support, it can see some recovery towards 1320 marks.
Okay, it can see some recovery towards 1320. But on that note, let's shift focus to our viewer queries then. Want to take up a query on CDSL from Debu K. The stock is, in the F&O ban, continues to be in the F&O ban. Even yesterday it was in the F&O ban, up somewhere around 1% or so. But the stock has seen, good traction in the last 1 month. However, off late in the last 5-6 sessions, we've seen the stock taking a back seat, and now it is in the F&O ban as well. But any thoughts? What are the levels that one should watch out for on the upside here? Because the stock is up somewhere around 1% or so today.
So I have comparatively positive view on capital market theme in India, given the demat accounts and awareness of the Indian equity market. So because of that, selective depository, exchanges, broking, AMC could be in focus. And here I have two choices to select between CDSL and BSE, and I'll go with the BSE. We are continuously recommending to buy this counter in last couple of months. And the good part is that 8-9 weeks back it corrected to 3700 marks and now back to 6800 zone. And every meaningful correction was being bought smartly, and I believe this stock has potential to rally to 7,000 to 7,500, which we have targeted from a long time. It has been making higher top, higher bottom, respecting to its rising support trend line. So with support of 6650, PSE can head to a 7,000 and beyond. So that could be the first preferred pick in the capital market. Looking at CDSL, it formed the bottom after the corrective move last 7 days. It has seen a correction from 1375 to 1235, and now it is all set to negate the lower top, lower bottom. So after the hold of 1292, it can attempt for a bounce towards 1350. So BSE is preferred pick, but CDSL also can be seen as a bottom out approach in the market.
Okay, that's a bullish view coming in on the capital market theme. BSE looking good, and the stock has seen a great set of earnings, and stock has seen a good rally of late as well. But let's shift focus to Titan then. There's a query coming in on Titan from Naveen. The numbers are slated to come out today. Profit growth likely to be in single digits. Revenues could be strong, but margins could get pressured. Multiple factors at play. Demand could be hit in the wake of rising or surging gold prices, which could impact Titan earnings as well. But the stock has been fairly sideways in the last 5 sessions. Is it going to remain in a range, or do you think post earnings it has the capability of breaking out of this range that it's been trading in?
So before I talk about Titan, let me give the certain aspect on the gold. Gold is quoting at 97,000. Price is dire after the Federal Reserve warned of the rising inflation and labor market risk fueling economic uncertainty. So that was the key trigger, and central banks are buying from last few months. And gold also works as a hedge against the inflation, or is known as a safe haven. So that is the reason that any geopolitical concern or political uncertainty or economic uncertainty will keep the positive stance apart from inflation is. So because of that, we are expecting the positive stance in the gold. It can head towards 1,03,000 to 1,05,000. Silver can also see the positive momentum towards 1,11,000. But again, economic growth is also important for silver to shine more. Now talking about Titan, stock has seen a decent recovery from 3250 to 3380 and now has been consolidating. I believe major trend is positive for the counter, and rising gold price is also supporting the bullish stance, and that's why we have noticed that every small decline is being bought. So with support of 3250, Titan has potential to rally towards 3420, 3500 zone.
Okay, expect a rally towards 3,500 zone when it comes to Titan. But from Titan, let's shift focus to Tata Motors. The stock has been, grabbing the limelight. First, it was the UK FTA, and now there are reports that US may announce a trade deal with UK. Bodes well for Tata Motors, and it's reflecting in the stock prices as well. It's cleared that 700 mark, up almost 7 to 8% in the last 2 sessions. We have a query coming in from Amit Kumar Srivastav. He's bought Tata Motors at 670 rupees. He's edged back into profit, when it comes to this holding. He wants to know what he should do now. Your thoughts? Should he keep holding on to it, or maybe is there a case to book partial profits?
So Tata Motors is one of the volatile name in the market. We have seen a wild swing on both the side. If I just look at the price history of last 13-14 weeks, even in the last scenario, it corrected from 723 to 535. It witnessed recovery in last 5 weeks and now back to 700 marks. So 723 is likely to act as a first hurdle for Tata Motors. If it manages to move beyond 723, which is 2 times hurdle in last 60 days, it can start the next leg. So above 723, it may see the short covering trigger, but as of now, first target will be 723. So suggestion is to buy or hold the long with support of 683 for target of 723. If it holds above 723, then the tremendous short covering of 8 to 10% cannot be ruled out.
Okay, a tremendous short covering of 8 to 10% can be expected if Tata Motors manages to clear 723 on a decisive note. That's the call. But there's a two-wheeler, a query on a two-wheeler stock as well. Arun Srinivas wants to know your thoughts on Hero MotoCorp. Interesting query. He says that since Hero holds a position in Ather Energy, but he doesn't want to buy Ather, he wants to buy Hero MotoCorp instead for the long term. Would you advise?
Yeah, he can hold the long-term position in Hero because the entire sector is comparatively doing well. However, in the last 7-8 months, we have seen a corrective move. In fact, Hero itself corrected from 62.50 to 33.50 marks, that is used from higher levels. But the good part is at lower levels, some support-based buying or the value comes in picture. So with support of 3,700, I believe one can look for an upside target towards 4,200, 4,250.
Okay, those are the levels on the upside to watch out for 200 or thereabouts on Hero MotoCorp. But one more query then on the tire space. Coming in from Rupak Mehta wants to know of a tire stock that looks good on the charts with a 1-year time horizon. Tire stocks, of course, have been on a roll. Look at the likes of CH, JK Tires. Anything that's catching your attention?
Yeah, so quite positive on entire tire theme of the India. There are few reasons. First, rubber prices are quoting at multiple months lower levels. Crude is also falling down. Rupee is getting stability. So three fundamental factors are working in favor of tire companies: crude, raw material, and for currencies USD. So because of that, some positive price could be seen. I have most of the counters on radar. To start with JK Tire, it has seen a bottom out approach, negated its lower top, lower bottom, witness a decent recovery from 245 to 335, rounding formation, double top, a double bottom. All the price behavior is seen near 300, and because of that, 350, 355 type of price target could be seen. MRF looks quite promising. In fact, couple of broking houses raised the targets for the counter. Lifetime high for the counter is at 1,51,000. It can head towards that levels. So as of now, the support for MRF is 1,31,000 for target of almost lifetime high of 1,51,000 and beyond. CET looks good, has been making higher top, higher bottom. We have seen a recovery from 2,500 to 3,750. Stock is trading at lifetime high. So with support of 3,650, it can head towards 3,900 zone. Apollo Tire also looks good. Positive price action, making higher top, higher bottom. Buy on decline could continue with support of 473. It can go to 520. So most of the tire stocks are in momentum, apart from their fundamental benefits, which can take the prices on the higher side.
Sure, those are multiple options on the tire stocks front. Rupak, you can take your pick. Stocks have been on a roll, and the future looks bright as well. But Chandan, that wraps up our query segment for today. But before I leave you, what are the recommendations that you have for our viewers this morning?
Yeah, so you have to be very selective for recommendations. One need to keep in mind that market as of now in a range between 24,200 to 24,550. And selective counters are likely to do well. One trade which I want to mention is BSE, Bombay Stock Exchange. Already I have discussed about the same. So with support of 6,700, it can head towards 7,050 marks. That can be the first preferred idea. Second, I'll go with some fertilizer name by keeping the agri theme in mind. The rural and the monsoons will be the next trigger. So with support of 709, it can head to 750. So Chambal fertilizer could be the second idea. So one is BSC, second is a Chambal fertilizer.
Okay, BSC Chambal fertilizers, two recommendations coming in from Chandan. Chandan, with that, thank you for joining in and sharing your thoughts, and of course helping our viewers navigate their stock holdings as well. Look forward to connecting again in future. Thank you.
Thank you.
Well, quickly take a look at the market. Flattened out. In fact, we did start with a positive bias, but just a shade below that 24,400 mark right now. 30 points down on the index, but the mid cap index is holding on to the positive zone. It did start with strength. it was up 6.6% or so, 0.5% or so, but cooled off slightly, although it is trying to hold its ground and trade in the positive zone. The breadth, however, is firmly in favor of gainers, almost 4:1 on the NSE. But on that note, let me bring on board my next guest for today. Joining me is Kunal Walia, founder StatLane. Kunal, lovely to be chatting with you. We've seen a very calm and composed response from the market when it comes to the escalating border tensions, Operation Sindoor. One would have thought that there would be a big knee-jerk reaction, and post that we would stabilize, as has been the case in the previous, surgical strikes in 2016 and 2019, Balakot strikes as well. But yesterday, we recovered pretty quickly. The dip was bought into. And of course, foreign investors were net buyers once again. I think for the 15th or 16th straight session, they've pumped in $5 billion in a matter of a fortnight. And yesterday, one would have thought that there would be some bit of jitters and the FIIs would turn sellers, but that hasn't happened. So now, do you think markets will look past these geopolitical tensions, especially since a big retaliation from Pakistan could be ruled out, so to say? Do you think now the focus will only be on trade and economy and how things pan out with respect to US and its trade policy?
Good morning, Nandita. So market is pricing in a very low risk of a full-blown conflict, and that's the reason we have seen a turnaround in the FI situation in terms of the positive inflows which have been coming in, as you mentioned, for last 15 sessions or so. That is largely driven by the reasonable recovery which we have seen post Q2 of FY25 GDP numbers. We have been seeing reasonable recovery coming into Indian economy. The macros are getting stronger. The forex reserves have been going up, as you know. So the market right now is a little bit casual, I would say, in terms of pricing in a very, very low risk of this conflict getting elongated. So one needs to be a little bit careful about what can happen in case there is kind of a retaliation by Pakistan. But I think right now this fundamentals of the economy are pretty strong, and that's the reason we are seeing this kind of a rebound from FIIs as well. Coming to you mentioned about the focus. The focus of the market has been largely after the correction which we have seen since September 2024 till I would say early March. Is largely on account of the slowdown in the EPS numbers which has been coming through in the market. But we had two large pivots which have been favorable for the market domestically as well. The budget, which provided more stability on the fiscal deficit side by controlling the fiscal deficit number nicely over last 3 to 4 years. And that continuation in fiscal deficit has been well taken by the market, plus the tax cuts which came through, which is going to boost consumption this year. And monetary policy, which has been holding back on account of high inflation, especially in first half of 2024, and the liquidity deficit which has been there largely till I would say Jan of this year, both has turned around. We have seen RBI becoming very, very supportive of economic growth by offering more and more liquidity. Just a number, 8 lakh crores of liquidity has been offered by RBI to the market. So the liquidity which was deficit in the banking system of almost 3 lakh crores has turned positive because of large efforts by RBI. And secondly, the rate cuts which has come through 50 basis points so far also is leading a pay for lower rates over next 6 to 12 months. So quite a number of positives which are helping India right now.
Sure. But in terms of a strategy at the current juncture, border tensions are still simmering, and on the trade front there has been good news in terms of the FTA that was signed with UK. So in light of these developments, what kind of portfolio changes should one make now?
Sure. The valuations continue still to be on a higher side for mid caps and small caps. So while building a portfolio strategy, obviously large caps would be a preferred overweight for investors at this point in time. But we would say it would be very, very interesting to look at some of the names in the mid cap side as well. However, we will prefer to be underweight small and micro cap given the situation as well as the earnings data which is coming through in this earnings season as well. So yeah, large cap and mid caps are the preferred areas for us.
Okay, large caps and mid caps. But any pockets within the large caps that you would look at, looking at the earnings season? PSU banks have disappointed, but some private sector names have stood out. IT, has been fairly okay, given the fact that people were expecting that companies like Infosys will not come out with a guidance in such a scenario, as trade tensions, amid trade tensions with US, but they did. So, in that sense, within the large cap basket, which areas would you look at now?
So we are looking at Indian markets from two parts. One part being largely domestic driven demand, which we think will be overweight for us compared to the export driven sectors right now, because we are not yet sure in terms of how the tariffs are going to play out with China, with India, and so on. So we'll prefer pockets which are largely driven by domestic demand, where we will largely be overweight. But given some bit of a volatility which is coming through in pharma, IT, we think at some point in time it will be a good idea to look at the names in pharma and IT as well. In case of IT, which you asked, many of the mid-cap IT names we like at this point in time. We are just looking at an accumulation phase in those names compared to the large cap IT names, because the growth relative to the P multiple which is available is not in the comfort zone for us. However, a lot of mid-cap IT names look very, very attractive and ripe for accumulation at this point in time.
You mentioned pharma, Kunal. Two risks. Some tariff may come through if we haven't really, or if we don't manage to strike a deal soon enough. Because Trump had hinted that you could see never seen before kind of tariff on pharma as well. And secondly, there was news flow yesterday that in fact pharma stocks are under pressure today as well. US FDA may be planning to announce unannounced inspections at foreign manufacturing units, and of course that would mean more surprise checks. Now this move aims to uncover violations in real time and take swift action as well. How would such a move impact Indian companies that are already struggling with compliance issues?
Right. So Nandita, it's a near-term negative when it comes to this kind of a news flow coming out of US. Surprise checks typically lead to more compliance pressure for smaller firms. As a overall pharma pack, it can lead to delay in approvals as well as some kind of a penalty for companies which are already under checks and balances or surveillance right now. But contrary to IT, where we prefer mid-cap IT companies, on pharma side, I think the larger pharma companies will be able to weather this near-term issue much better, and I think they will be reasonably good candidates to look at in case there is a correction which is coming through because of this tariff issue or the surprise compliance checks which are likely.
Okay, let's talk about the Fed decision as well. On hold for a fourth straight time that was widely expected. Your thoughts on Powell's comments, especially in terms of how he will not yield to political pressure when it comes to rate cuts, and of course he's also mentioned that we are where we are because of Trump's tariff policy. He was pretty blunt and called a spade a spade. But going forward, would you dial down the expectation of a June rate cut, and would you expect one in July? How did you read into the federal chairperson's commentary?
The independence of a central bank is pivot to any country, right? And it's good to see that the Federal Reserve is sticking to its trajectory of understanding the economy their way and providing inputs on interest rate cuts or maintaining the interest rates. So I think independence of central bank is very, very pivotal for any country. So that's on the good takeaway for all of us. Coming to the scenario likely over next 6 months, over next 12 months, I think the tariff issue is going to lead to a global slowdown. I don't think there are two thoughts in the market about it. How much the economy is going to be slowed is something which we will not be able to tell now. The US quarter one data was not good at all. Though there are different analysis available in terms of why there is a contraction. But assuming US has to grow at 2%, possibly that is not going to be on the table the way the tariff scenario is playing out right now. So a slowdown in US is going to lead to a contraction in demand. as well as we will see a reasonably slowdown in China as well. So if the global world is slowing, the typical playbook which is available to any central banker is to cut rates. So while we understand the near-term inflation issue which may come up because of tariff, the unemployment numbers going up in US, but finally to kickstart the economy, the interest rates have to come down in US. Quite a number of reasons if we look beyond what the Federal Reserve stated yesterday. US is running a national debt of $35 trillion, and their interest payment is more than $1 trillion, which is larger than the defense expenditure. And we have never seen this happen in last 20 odd years, that the interest expense of the US government is higher than the defense expenditure. So at some point in time, whether it is June or thereafter, we are expecting at least 2 to 3 rate cuts by the Federal Reserve in 6 to 9 months. So while we understand the inflation issue, tariff issue, etc., but finally for economic recovery, a lower interest rate has to be there.
Okay, 2-3 rate cuts post June. That's the view from Kunal. But
Yes.
with that, Kunal, I would like to thank you for taking out time and joining in. I look forward to meeting you again and having a longer conversation as well.
Yeah. Thank you, Nandita.
Thank you. Thanks a lot. Well, on to the latest on Operation Sindoor then. A day after the Indian armed forces targeted terror infrastructure deep inside Pakistan and Pakistan-occupied Kashmir as part of Operation Sindoor, Pakistani troops resorted to heavy cross-border shelling along the line of control in Jammu and Kashmir's Kupwara district on Thursday. In fact, as per reports, Pakistani troops targeted civilian areas in the Karna area and fired shells and mortars after midnight. But no casualties have been reported thus far. Meanwhile, Pakistan's Prime Minister has pledged to retaliate after India's deadly missile strike, saying the country will now have to pay the price for their blatant mistake. India conducted nationwide civil defense mock drills as well under Operation Abhyas. The drills were carried out in 244 districts to prep up the country's preparedness to deal with emergencies and terrorist attacks. Now, mock drills have been carried out in Amritsar and other cities near the border as well. Amritsar authorities initiated a blackout and urged people to stay at home. Meanwhile, the government will brief opposition on Operation Sindoor in an all-party meeting today. So that will be crucial to watch out for. Well, that's all the latest on Operation Sindoor. But looking at the market, extremely flat. We have given up those opening gains, but no big cuts. Just about around that 24,400 mark. I think 24,400 is proving to be a resistance zone for the Nifty. Yesterday, although it did end marginally above that level, but today we are struggling to cross that level in a decisive manner. Mid caps continue to hold ground. They are in the positive zone, and the breadth is also looking fairly positive at the current juncture. Let's see how things really pan out. But three big earnings to watch out for today. The likes of L&T, Asian Paints, these are the two, and there's another one that's expected. Titan, that's another one that's expected. So yes, three big earnings to watch out for. We'll be getting you updates on that on our website. So tune in to moneycontrol.com for that. But with that completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. I'll see you at 3:30 p.m. with closing bell. Don't forget to tune in and have a good trading day. And stay tuned to Money Control for all your latest updates on Operation Sindoor, on the markets and earnings as well. Thank you for watching.